All right, g'day there everybody. Thanks a lot for joining me on this Tuesday afternoon market recap. A few observations that I want to make as at the close on Tuesday. Obviously, the markets did go through that of a considerable pullback today. The Dow Jones Industrial Average closing down just over 400 points. What we are essentially doing right now is retesting once again that macro support area. Before we get there, however, I wanted to speak about Google and also Caterpillar today. They released their earnings. We saw the market reactions to both of these individual stocks, and they were relatively negative, so to speak. However, the structure of both of those individual charts are still holding up, so to speak, relative and comparable to the broader US equity markets. That's going to be, I guess, the narrative or really the framework for this Tuesday afternoon market recap. So why don't we begin with Google, and let's just talk through what happened today. As at the close, we were down $51.17. We do have that of a long day type of Morobozu candlestick. It isn't a shaved top. We have both an upper and also a lower wick, which is good to see. We did more or less close that opening gap to the downside today. And towards the end of the session, much like the markets, we began to see a couple of bids come on back into Google. You can see the intraday low, or at least the push lower, which did reverse a little bit to close off from the lows. So you can see we closed at $1,022. We are still holding up above really the psychological round number here for Google at $1,000 per share. So we still have about $22, so to speak, until we're going to definitively come on back down and retest this 1,000 pivot. It's going to be critical just what happens for Google at this pivot. If this gap, so to speak, is more or less filled, but we still have this very pronounced upper gap up here at 1,131, this is the way which I see Google playing out. Essentially what we're going to see is Google selling off down a little bit more, down to around this 1,000 pivot. If we hold this pivot, and it's a big if at the moment, obviously the reaction was quite negative. It wasn't the biggest of gaps, by the way, for Google, but if we can see this pivot hold, this pivot support hold at $1,000 per share, this magnet is going to drag Google all the way back on up to not only close this gap, which more or less has already been closed during the intraday movements on Tuesday, but it is going to be about a $131 move off from the lows at 1,000 to take us on all the way back up to close this open window dating back to March 2018. If we do crack support, and really at this particular point, I'm not looking at support being broken. Of course it can happen, but if you pay attention to all of the touches around this 1,000 pivot, either as resistance or once we broke it as new support, it's going to take an absolutely tremendous amount of supply to push it definitively to close below and then to continue below 1,000. If this does happen, well, 950 becomes a pretty decent target. That's going to be about a $50 move. However, we still have a number of little wicks below that 1,000 pivot, which turn out to be those reversal points. So that's essentially what I'm looking at on Google. I am not in Google, nor should anyone else be in Google, so to speak. What you should be paying attention to is this pivot and what happens once we come on down and actually retest this. It's going to be critical for the longevity of the bullish trend, all right, for Google moving forward. Now, if I change the discussion into Caterpillar, you can see a tremendously strong outside day Morobozu engulfing candlestick. This was quite an impressive reversal. It's very rare to see these types of reversals. Before the market opened, Caterpillar reported it blew estimates away quite considerably, really. However, they did say that this might be the watermark level for 2018 when it comes to earnings per share. On the back of that, it began to sell off. You can see we opened up just shy of about 160, and we closed all the way down here at 144.44. This is again an outside day reversal candlestick. This is on also quite incredible volume. There really wasn't all that much buying taking place in Caterpillar even towards the end of the session. However, once again, it is critical to note, very critical at this point. Although this is a very bearish candlestick in and of itself, we are back down at this support area, much like Google, so to speak, and also the Dow Jones Industrial Average. The S&P has a little bit further to move, and so does the NASDAQ. So again, I wouldn't be hell-bent, so to speak, on shorting below the intraday lows of Tuesday's session. This applies to Caterpillar and also Google instead, I want to be paying attention to what happens in this area between 144 and really down to 140. Much of the discussion that I just had with Google is certainly relevant and also applicable to Caterpillar, because within the larger uptrend, this could be some form of still an intermediate correction. It's always good to cycle through earnings to sort of move beyond that and allow, I guess, the battleground or the battlefield to sort of settle a little bit until we can really side with either the bulls or the bears moving forward. But again, I cannot stress enough just how important this support is. This is going back to the beginning of April. Obviously, we saw a very strong reversal off from the lows at 140. A lot of people got to liquidate the trade at 155. They made a bunch of returns, or at least money, on those call options. And I'm very happy that we actually exited out of this stock prior to earnings. It's a very important learning opportunity if you are listening to me here on YouTube, to close option trades prior to earnings. The reason for that is because, again, much like Google gapped down, it ran $50 to the downside. Caterpillar gapped up, but it still closed, however, $10 down the net movement. So you can see the volatility which takes place over earnings, and it's always best to close out those trades. So 144 down to 140, this is going to be the type of area, or at least the location, where I'll be looking for potentially nibbling on some calls again. And that is, of course, only going to happen if we start to see similar types of reversals set up, not only on the Dow, but also the S&P and the NASDAQ. So as you can see on my screen, the Dow Jones closed down 424 points. You can see that we are already starting to establish buying pressure, even though it was a rather negative day today. We closed at 24,024 points. There's still nothing really to be concerned about at the moment. You can see obviously that we're still holding support. Yes, we have been experiencing a little bit of weakness, especially this week to begin the week. We've seen that as at Tuesday. It's going to be interesting, first of all, if the sellers can drive this market below the lows, all right? And I'm talking about a close and then a continuation. If they cannot, this is going to be the exhaustion of the supply, or at least the selling wave, the selling pressure, which should ultimately flush out the market. And that will be enough for us to ultimately hold and then reverse. So I am looking at this for intraday reversals. It's something that I'm probably not going to get into Wednesday. I'm going to need to see a couple of consecutive days, or at least buying pressure down here, to really establish that this support is going to hold. Until then, I'd recommend for you to sit on your hands, so to speak, allow the market to remain, I guess, relatively bipolar, so to speak, until we transition through earnings. I know that Wednesday and Thursday are going to be tremendously busy for the stocks in our top 12 list on the left-hand side of my screen. We have one stock reporting on Friday. Once we get through this week, we're going to have, I guess, a clean slate for the week upcoming and for the weeks upcoming, the months upcoming until next earnings season. So it's quite timely that we have exited out of a bunch of profitable positions over the past 1 to 2 weeks. Now we have I guess the bonus or the positive sort of nature behind sitting and doing not a whole lot, allowing earnings season to sort of navigate past us, as then we'll start looking at open positions or jumping into a bunch of trades that I think are already developing. I mean, we're seeing at least 2 of these stocks come back down to support areas, and I'm expecting a lot of the stocks in our top 12 list to really do the same thing. I'm not really expecting all that many stocks to gap all that far above or below support or resistance, so to speak. It looks as though we are going to get stuck. This market is stuck, and we're just going to continue this sort of sideways chop. Now, if we do see the breakdowns of support, that's going to be a different type of video. We've spoken about it over the weekend and over the past number of weekends. It's always a possibility. I don't want you to think that it's not a possibility, but we do have an insurance plan, so to speak, in place to capitalize on that if the markets decide to break their support at this particular time. This just looks like, again, routine selling pressure, whipsaw chop around this critical support area. The S&P 500, again, down 35.7 points, a little bit of a lower wick down here, but again, as a whole, a relatively sort of negative day. And also the NASDAQ down 121 points. This is obviously aided by the Google report released today. So a lot happening in the world of financial markets. The US dollar today, if I can just bring this up, I was going to actually transition into, where's my mouse? There it is. It's lagging a little bit, pardon me. I was going to move into GLD to begin with, but we'll have a look at the US dollar. It did pull back today ever so slightly, and what this means is that we started to see a little bit of stabilization in the price of gold and also silver. So I wouldn't be paying attention to the open windows. GLD is up 61 cents. Again, we're not in this short, we're not in this long. We're just simply following along with this as the US dollar hopefully continues to push up a little bit higher. Although we don't have any vested positions in the US dollar index, we are still waiting for that to move and cycle all the way back up to resistance, and then to ultimately see the basing and the bottoming of these two commodity markets that we follow here in Pro to set up that next bunch of trades. I do think it is going to happen relatively soon. It obviously hasn't happened yet, but it's only a matter of time until we start to see silver and gold begin to break out and trend, which is going to be very exciting. And potentially we might be able to take advantage of the continuation of the longer trend with the US dollar as well. The time, however, is not right at the moment. We do need to allow this just a little bit more time. Now, again, as I go through the top 12 list over here on my screen, Tesla, you can see for yourself that we still have an earnings report early May. It didn't crack whatsoever. It actually closed up 9 cents. So Tesla's holding up relatively firm. I spoke about Netflix yesterday and paying attention to the rising 20 exponential moving average. We actually closed just below this today, down $11.67. We're still above the 50, but really we're stuck moving sideways. We have now definitively closed this open window. This becomes a very simple, straightforward trade, a breakout trigger above the highs. We're going to have to monitor this for the rest of the week, but if it continues to pull on back down, we might actually be able to bring that trigger down and place it off from that support area. IBM is still holding up relatively well, up 30 cents, down 30 cents today. However, it really went nowhere. We're still basing a little bit down here around this 144 pivot. So you can see that Tesla and IBM really aren't participating in the sell-off. Goldman Sachs, however, is. Goldman Sachs is a stock that we haven't really placed a trade on for quite some time. I'm actually thinking of cycling this out of our top 12 list just because it's been rather erratic when it comes to the structure and the discipline of what we look for when we want to trade individual companies. So I'm still thinking about that. If you want, put some comments in the comment section as to what we can possibly change for Goldman Sachs. I mean, if we say, for instance, we rotate Goldman Sachs out of the list, maybe put in a few suggestions as to what you would like to see me rotate back in to fill its place. That would be much appreciated if you chose to do so. I have obviously a couple of stocks that I think will fit the place or fit the position quite well. However, if you do have recommendations, I will go through a process. I will look historically at what that individual stock has done. And obviously it has to be optionable as well. There has to be enough open interest to satisfy some of the criteria that we look for when we choose to trade options, or at least viable candidates for options trades. We have CVX again, down $1.04, but largely just holding quite well. We are moving into earnings. So I think this is the last stock that reports. That's on Friday. We've got COP set to report on Thursday. You can see how a lot of these individual stocks, or at least this week, is very busy. We've got Baidu again. This is reporting on Thursday. Boeing Airlines is tomorrow. That's going to be quite exciting as well. You should have been out of this a number of days ago, if not last week. Amazon is set to report. This is probably going to be a major market mover as well, to see what Amazon does. If we start to see some favorable sort of responses to earnings, that's really going to help the NASDAQ hold up at that support area, at least firm up there and help pent-up demand, so to speak, around those critical support areas. We've got Apple as well, which isn't reporting this week. This is pushed into the first session of May 2018 as well. So a lot happening also in the world of Facebook. Facebook is cracking down, so to speak, at 162. However, tomorrow is their earnings report. We are not in this trade. It is something that we have spoken about, and I have spoken about this 150 pivot. So if Facebook does, say for instance, sell off $9 tomorrow, I mean, this is the closing price as at Tuesday, 159.69. If we see, and this is post earnings, I'm not sure whether it reports prior or after market closure, but once that report is announced, give it a session, see where it closes. But if we are closing after earnings at about 150, this could be an absolutely phenomenal trade once we stabilize and if we start to see a turn. That is pure speculation. Who knows? Facebook might surprise everyone and gap up, say for instance to 176. Who knows? It might even gap up to 196. It's going to be very interesting to see what Facebook does. Also outside of that, there has been a bit of interest after I spoke about EWZ, which is the Brazilian index fund. You can see that we have closed this open window. And even considering the sell-off today, we're only down 21 cents on this index fund. So I'm still liking this. We're still at support and we're getting very close to that bullish uptrend. This is coinciding with oscillators that are trying to flick up. Look at the MACD. Been oversold for about a month now, or at least momentum has been negative for maybe even closer to 2 months, really. Oh, sorry, no, about a month and a half. But you can see for yourself, there's a number of reasons why I like EWZ. I'm still faithful with this and I'm, excited about this moving forward as well. So I thought I'd speak about that as well. On that note, everyone, if you have any questions, email me success@pivotpoint-trading.com. I will wish you a very pleasant Tuesday evening. I'll be back with you later in the week for some more market addresses. All the best. It's James signing off on behalf of Pivot Point Trading. Farewell.